Morning,
This conference
everyone.
will now be recorded.
Morning.
Okay, as you just heard that, announcement. This conference is going to be recorded, and we'd ask you all to turn off your mics in case you haven't. On behalf of Doug Theobald, Patrick Leary, and Lisa Behan, I welcome you to our presentation. What is the hottest topic going right now? And we're just about to go over 100 people on this phone.
Oh my God.
Okay, so this is the loan forgiveness under the Payroll Protection Program with everything we know as of April 28th and only what we know as of April 28th. With us today, again, I introduced Doug, Patrick, and Lisa. The way I want to receive questions is if you have questions, I'm not going to be able to look at the chat as I'm doing this. So please send your questions to Doug, Patrick, Lisa, and myself. Somebody is on my site, my email, and we will take questions accordingly. They will summarize the questions and ask me questions at the end of our presentation. I'm not going to be taking questions during the middle. And again, I can't do the chat and do the presentation at the same time. All the guidance I have is preliminary. The way this has worked is I think the SBA was tasked with getting the money out, get the dollars out as soon as possible, and then we'll get the forgiveness rules later. Again, I'll give you the best information that I have at this time. We will be back, I think, with two more seminars, two more of these webinars as we go through this process, because it seems to me like every couple of days is like a year this time of day, in this season of the virus. And so there'll be a lot more information coming out as we get better guidance. We'll be here to give you better guidance. That's MP's direction for all of you. This agenda is also like a table of contents. We'll go through, and this was hopefully put in there to help you find when you go back and look at this, and I hope you all will use this as a resource guide. You'll use this again. The 75% rule will be covered late in the topic. It is, I think there have been 75 different interpretations of the 75% rule, and we'll show you how it's actually calculated here. After that, we've got some other thoughts for you, and we'll continue on with our presentation. I don't know what happened with the latest update slide, but the latest update slide has said that if you, May 7th is a crucial date, okay? If they're trying to figure out, it's a political football at the moment, those who have received the loans inappropriately. There was something right online today about the Los Angeles Lakers getting money and giving it back. May 7th is the date that if you think you have received PPP loans inappropriately, that you should be looking at to give the money back. Latest updates. The other latest update is there is some talk in the Senate as they're going to make you prove somehow that you need the money. The senator from Wisconsin, I think, is leading the charge here. There is nothing formal as of yet that I can give you any guidance on. He was talking about both some sort of net income test and or revenue test. As of now, none of that is in play. For those of you, because they just opened up the loan again, I wanted to go through what turned out to be the final interpretation of how you asked for the loan, or the loan calculation. You took your gross wages, you took everybody out who was in excess of $100,000. You were allowed to add on employer, state, and local payroll taxes, health insurance costs, retirement costs. And right here, these were the items: federal payroll taxes and independent payroll, independent contractors. that took a lot of time for SBA to issue guidance on. The final rules are they should have not been in part of the loan. Federal payroll taxes never counted. Nobody really understands the theory why. Independent contractors were deemed to be allowed to file their own own PPP loan to get as a Schedule C, as a sole proprietor. The factor of 2.5%, what this was really, in my mind, supposed to do was to keep people off of the unemployment rolls and keep the businesses rolling and keep the workforce in place. So what they did, the 2 factor was to give everybody 8 weeks of payroll. The 0.5 factor was to give you additional guidance or additional funds to help you run your business, mostly in the terms of rent, interest, and utilities. So 2.5 times, 2 weeks for payrolls, the 0.5 point to keep your business in force. Latest updates we went over. Expected procedure. Just as you filed the loan application, as we just went over, you, the customer, the one who received the loan, will have to file an application to in fact have your loan forgiven. This isn't something that happens automatically. The theory is at the moment, at the end of your usage of the loan, you will timely submit an application to your bank for forgiveness with all required documentation. What does that form look like? Nobody knows. The SBA has not released that form yet, okay? But what they have said is that the banks will have 60 days from receipt of your application, loan forgiveness application, to determine the amount that is actually forgiven. And as I said, every bank seems to have their own application process and their own forms. They will likely all have their own loan forgiveness application. What is in the rules? That will be required documentation for you to attach to your loan application are payroll records. You'll have to do some full-time equivalent calculations, which we'll be going over. You'll have to be providing some pay rates. Let me just give you a bit of a preview now. If your full-time equivalents, pardon me, if your full-time equivalents have decreased, they're not going to be happy about that. You're going to see some of your loan not forgiven. If your pay rates have decreased, they're not going to be happy about that. You're going to see some of your loan not forgiven. You're also going to have to provide your interest, rent, and utility invoices and proof of payment. And the certification, there was a certification when you asked for your loan. There's a similar certification when you ask for loan forgiveness, and that is all the documentation that you're about to give or that you are giving is in fact true and correct, and that the amount for which forgiveness is requested was used to retain employees, make covered interest payments, rent, and utility payments. The issue there is, what do you do when the governor and many governors have closed the site down? How do you retain employees? It's a question I don't have an answer to and would love to hear one. So what happens to the loan not forgiven? It is the way this has been geared. They expect very few businesses to actually have 100% of their loan forgiven. It came out late. A lot of the employees were already on unemployment. The unemployment, as I understand the rules, have turned out to be very well. People are sometimes making more on unemployment than they are on payroll. So so again, they don't think a lot of the loans will be forgiven. But what happens if it's not forgiven? It's an interest rate of only 1% charged from the date the loan is received. There's a 2-year repayment period with payments beginning in month 7. Should you want to, there are no prepayment penalties. And I think you all know there are no fees associated with this loan. My insight as to this is over the next 8 weeks, continue to make sound business decisions. Focusing too much on forgiveness may not build your equity and benefit your business. And a 1% 24-month loan is a heck of a deal. So what you don't have forgiven, paying 1% over 24 months works very well. Key dates. The 8-week period begins on the date the loan was deposited in your bank account. Okay, so funds received in the bank on April 15th, your 8-week period ends on June 10th. It's not 2 months, it is 8 weeks. At least that's the current guidance we have. They're trying to get them off that guidance, especially, again, I'm repeating myself, for the businesses that are now sheltered or closed. They'd like to extend this period and let you choose in a different 8 weeks to apply. As of right now, I cannot tell you that that's happening. I can tell you SBA has been requested to change that and modify that. It seems from what I'm reading, that's a pretty solid position. The cost that you are allowed to put on your application must be incurred and paid during this 8-week period, okay? So document the bills that pertain to this 8-week period. And my examples here, I kind of repeat myself a little bit, but May and June rent can be paid during the 8 weeks and count as a forgivable cost. The July rent cannot, okay? So in a 60-day period, I shouldn't say 60-day period, in an 8-week period, you incur 2 months rent. You're allowed to put on your loan forgiveness application 2 months rent. And one of the common questions is this cash basis? Is this accrual basis? This is SBA guidance and Congress guidance. We have to throw those rules out the window, okay? Incurred and paid, yes, the rent paid for the month of June and covers the entire month of June, but my loan should only go, per my example, to June 10th. Don't overthink it. They're looking for 2 months of rent, 2 months of interest, 2 months of utilities, 8 weeks of payroll. There are 2 ways that even if you spend all of your money on your payroll, that you will still not have your loan forgiven. And I've referred to those as Trap 1 and Trap 2. And we were building on this. This is a building block presentation. We're going to come up with the example at the end will tie this all together. But what they're going to want you to do is look at your FTEs over your baseline period. Your baseline period is your choice. Choose the lesser of your FTEs from February 15th to June 30th, or from January 1st to February 29th. You will then compare that FTE to your FTEs during your 8 weeks forgiveness period, okay? And in my example, you went from 20 FTEs to 18 FTEs, a decline of 2, a decline of 10%. When we get to the example, I did this presentation yesterday as a practice, and it opened a lot of people's eyes as to how punitive this is. So we'll spend some time on that. The Trap 2 is a pay rate reduction. Again, even if you spend all of your money on your loan on payroll, if you've given people, your employees who were employed in 19, I just read that rule last night, who were employed in 19 and continue to be paid in 2020, if they've received a 25% reduction in pay, you will see that part of your loan is not forgiven. And you're going to compare your pay rate. This is what the law says. It's very convoluted at this time. It says, compare the pay rate during your 8-week loan forgiveness period to your pay rate during the most recent quarter the employee was employed prior to the 8-week period. Everybody is pretty much convinced that they're going to simplify that, and they're going to say, look at the payroll in January and February. I'm sorry, look at the pay rate in January and February and compare the pay rate to what you paid during the 8-week period.
Hey, Bob.
Yes, Patrick.
Just a quick question. Sorry to interrupt. What about overtime? Is overtime somebody getting paid overtime in the previous period and not in this period? Is that going to come into play with pay rate?
Great question. Thank you for pointing out that I didn't get there. Great question. Here's what I think the way the FTEs are going to work is overtime. Anybody who worked overtime will be deemed to have worked 40 hours. So the additional overtime hours will not hurt in your FTE calculation. So if you had, for instance, 3 people working 60 hours in January and February, I believe it's going to be one in the calculation is 1 FTE for each of them for 40 hours, and it will be the same 40-hour usage of the FTE in the 8-week period. So overtime should be pared back. There's also some talk about pay rate being commissions and the like being pared back as part of the pay rate reduction. And just to go through a quick example here, Sam's pay rate was $40. To go through the example, it's just the excess of the $5 an hour. So the excess of the 25% reduction that is going to reduce your loan forgiveness. Little convoluted, very convoluted, because they expect you currently to do this on an employee by employee basis. Again, when you see the example, this will really hit home as to what happened there. So then they said, well, what happens if you fall into trap 1 and trap 2? What happens if you had an FTE reduction, or if in fact you had a pay rate reduction? If it so works that you can make that up with guidance we still don't have as to exactly what they mean, excuse me, but if you can make that up sometime before June 30th, which again, I think is a date that with the new loans just coming out and with certain businesses, communities, Massachusetts in particular, essential businesses still closed. I do expect that date to change. I don't have any guidance to tell you that it will change, however. But they're expecting you're allowed to increase your FTEs, you're allowed to make up your pay rate deficiencies so that you have your total forgiveness. The FTE deficiency we're going to see is probably a pretty good idea to make up. The pay rate deficiency, you're either giving the employees the money or you're giving it back to the SBA. So really that's where I look at you and I say, what's your business decision here? What's your business decision? What provides you with the most equity? So before we head to payroll, let's go to cost other than payroll, okay? And it's for obligations that originated prior to February 15th. So they don't want you to go out and get new leases and new loans and things like that after February 15th and try and put this on your forgiveness calculation worksheet. Obligations prior to February 15th that were incurred and paid during the 8-week period. Again, we're still waiting for an awful lot of guidance on this, but this is what I can tell you is the best current guidance I have. For mortgage interest paid on any loan secured by real and or personal property is going to qualify, okay? So a lot of people were asking me, is my truck loan going to qualify? Is my other vehicle loans or other equipment loans going to qualify? As long as the interest on the loan is secured by real and personal property. The principal payments are not allowable / forgivable cost. It is just a mortgage interest. I would hope that most of you have reached out to your banks and your lending institutions trying to get a waiver or a reduction or what have you on your principal. I expect most interest on most lines of credit are appropriately secured. So therefore, that interest will qualify. As I sit here and read this, I'm thinking about interest on credit cards. And I know I have a couple clients with interest on marketable securities, loans from their investment accounts. Since those generally do not have security, that interest as of today will not be a forgivable interest. And let me stop and say that it is the bankers who will determine this. And again, how each bank will interpret these rules is up for, just as they had different things at loan application, I'm sure they'll have different things for loan forgiveness. As far as rent goes, both real and personal property rents qualify. Again, real estate and all of your equipment rentals should qualify. Follow the lease carefully. A lot of you have common charges. A lot of you have, increase for rent, increase for escalation charges. Get as much on the loan forgiveness application as you can. If it's incurred in any way within the 8-week period, pay it within the 8-week period and seek forgiveness on it. As of right now, leases with related parties qualify. I know a lot of you have businesses, the operating businesses in the S corporation. The real estate is in a family partnership. As of right now, that rental payment qualifies. My caveat to that is a lot of you don't have leases. And will the banks and the SBA require a written lease? Oral leases are good enough for IRS purposes in most cases. Will they be good enough for the banks and SBA purposes? I do not know. Stay tuned. Forgivable costs.
Hi, Bob, this is Lisa. Before you move on, can I ask a question about the leases and related parties?
Please do.
Have you seen anywhere that there would be a look through to how the related party spent the rent?
I have not. Excellent question, Lisa. Thank you for pointing that out. So we pay rent to the related entity, the partnership. The partnership probably makes a payment of interest and principal to the bank on their mortgage, maybe makes a distribution to the owners. There is nothing in the guidance right now that says you look through to see how the related parties spent the money. It appears to be a loophole. I think they have bigger fish to fry right now. They haven't addressed it, and current guidance is they don't think they're going to address it. They think they're going to let that go. Thank you for your question, Lisa. Utilities, electricity, gas, water, telephone, internet, and transportation. I've never heard of the term transportation utility before, but what it is deemed to mean is fuel for your business vehicles. Okay, people have asked, okay, so it's my business vehicle, I get my excise tax and my repairs. I don't think so. I think it's going to be just the fuel for the business vehicle. It has to be a utility. So an excise tax isn't a utility, a repair isn't a utility. Okay, and my caveat there is current guidance suggests that the 2 monthly bills paid in the 8-week period are the costs deemed to be incurred. Don't think about the dates of service. Don't think about the dates on the bills. Think about when is the bill due? Is it due within the 8-week period? It's going to be deemed to be incurred in the 8-week period, okay? Document, document, document. Be ready to provide the invoice and the bank statement showing the payment. However you pay your bills, be ready to show those payments.
Bob, Jeff here. Just wanted to chat in here real quickly in the chat room. We had a quick couple questions for you that I think are pretty pertinent. You talk about document, document, document. Does that include copies of leases, and other sorts of invoices and whatnot with regards to leases?
The banks will let us know. The SBA and the banks will let us know. I would suspect they will. The more documents you can have, the better. I would give as many documents as I possibly have. I would rather give them the lease than not give them the lease. I would rather show them that the lease was incurred prior to February 15th than subsequent to February 15th.
Thank you.
The current guidance as to pay dates is the dates paid within the 8-week period are the dates that count. This is driving everyone out of control. Let me give you an example. I had a client who got the funds, the PPP loans on April 14th. Their next pay date was April 15th. That, to the guidance we have at the moment, is your first of 8 pay date payments that will count against the loan. I know it makes very little sense. And I know none of those work weeks or work days were within the period. They are deeming to have payroll incurred on the date, the pay date. Okay, you can't overthink this. This is SBA guidance. It's not accounting, it's not accrual, it's probably some sort of weird hybrid, but that's the best guidance I have for the moment, is that it's the pay dates within the 8 period. That's why I went back to, remember, it's not 2 months, it is 8 weeks. They're very clear on that point. All reportable compensation counts. People have asked about wages, commissions, tips, vacations, et cetera, et cetera. All of that counts. What doesn't count? Anybody who made on an annualized basis more than $100,000 in a year. So that's $15,384 for an 8-week period. You shouldn't be seeking forgiveness on anybody who made that amount of a payment, okay? You shouldn't, or excuse me, in excess of that amount during the 8-week period. You cannot seek forgiveness for those whose resident is outside the US. For those who are paying people under the Family First Act, either for sick pay or for child stay-at-home pay, whatever provision it is, since you are to be reimbursed for that, and we're going to go over this in a little greater detail, since you are to be reimbursed for that, you should remove those from your wages. They are technically not your wages once you've been reimbursed under the Family First Act. You're allowed to include employer, state, and local taxes, okay? The big one is state unemployment, okay? I threw down there mass family leave. I believe that counts. I believe that's a state and local tax. Federal payroll taxes, for whatever reason, do not count. In the calculations I did originally, I put those down, for payroll, for loan application. AICPA agreed with me. SBA did not. Federal payroll taxes do not count.
Bob, one more follow-up question from the chat room. Workers' comp.
No.
And a reminder to everybody out there, please make sure your mics are muted. Thank you. Thank you, Bob.
Thank you, Jeff. Health insurance premiums count, but workers' comp premiums do not count. That was a great question. It is your employer share only. So most every employer I know has the employees paying a portion, and everybody, there's a lot of people on COBRA right now. It is just your net cost that you are supposed to seek forgiveness on. Guidance is being sought for HSA contributions and other plans like that that really aren't monthly payments. And when that guidance becomes available, we will get back to you. Retirement benefits are a huge open issue to me. I'm really looking for guidance on this. Currently, what is pretty clear is that as your employees make contributions and you have the match, right? You give a 5% match or whatever it happens to be. That is pretty clear. That falls under employer matching contribution. But what about your end of year profit sharing contribution? Okay. Can you make a contribution based upon that? And the current answer is nobody knows. For those who extended tax returns for your 2019 tax return and are going to make your profit sharing contribution within the 8-week period, does that count? And that answer to me is pretty clear. That liability was incurred on December 31st, 19. It's not paid until sometime later, but it's incurred prior to the 8-week period and therefore not a forgivable expense. But can you take your payroll over this 8-week period and make a profit sharing contribution? I'd like to tell you in the future you're going to be able to, but there is no guidance on that currently. It is true, all guidance says right now that independent contractors, I'm asked this question all the time too, are not on payroll. So therefore they are not included in payroll costs and not included anywhere else in the calculation. Quickly on sole proprietors were not treated very fairly here. Self-proprietors were only allowed their income on their Schedule C, and they're required to include or submit their 2019 Schedule C. They did not get to add back their personal health insurance. They did not get allowed to add back their personal retirement plan, so they were treated unfairly. Where it appears they have a benefit, it appears that they are not going to be asked to prove that they took salary or wages during the 8-week period. They're going to be deemed to have payroll equal to whatever they made in the past year for that 8 weeks. It doesn't look at this current time like you're going to have to do a pro forma of any sort to prove that you either got paid or whatever. The sole proprietor is also allowed above salary to put on rent, interest, utilities. If they have employees, of course, they're allowed, just like everybody else, to put on the employees and the other costs. Partnerships were completely confusing. April 14th, SBA finally said each partner is not an independent contractor. File on behalf of the partnership, and you are deemed to equal your wages. Your partnership wages are deemed to equal your self-employment income. How are you going to prove your self-employment income during the 8-week period? I don't know. There's no guidance on that yet, but my recommendation is to pay each partner $15,384 during the 8-week period, and hopefully these will be documented wages. When we know more, all of our clients will know more. Oh, good, we're up to the forgiveness calculation. Okay, so let me take a sip of coffee. Just like you did, you will get your gross payroll for the 8 weeks. You will take away anybody who had salary or wages in excess of $100,000 and family medical leave. You'll be able to add the employer cost of health insurance for 2 months, the employer cost of state unemployment taxes and retirement. And so our total payroll costs, hopefully you can see my cursor, you're following my cursor a little bit. The total payroll costs are $180,000. Now, this is how the 75% calculation works. You take the payroll cost and you divide it by 0.75, and you determine the maximum amount of forgiveness. Okay, that's how you get this 75-25 factor. And then what you find is, what is your maximum other cost? Your maximum other cost is the difference between the 240 and the 180, okay? You'll notice on here that I have not put the loan amount that you received on here anywhere. It doesn't come into the calculation. So many people think that the loan calculation says I got a $100,000 loan and therefore I've got $25,000 to spend on non-payroll cost. Absolutely incorrect as we have current guidance. Current guidance is, I'm going to say it one more time so it hits home, 180,000, your total payroll cost divided by 0.75. That's how you figure out your other allowable cost. In my example here, allowable costs, just to go through that one more time, rent, mortgage interest, utilities. I said we only had 50. We didn't spend all we were allotted. Therefore, our forgiveness before our traps is $230,000, okay? Now let's focus here for a minute. Our head count trap, this again agrees to slide 10 as we went through it. We remember that we said we had a 10% reduction in FTEs. So we take our loan forgiveness, what I call forgiveness before traps. We take away 10% because our FTEs reduced by 10%, and we have $23,000 of loan which we cannot have forgiven, okay? Now, I did a calculation here that if you were to bring on an additional 1 FTE and have this reduced, I guess what I'm going to say is, let me say that I brought it on to 2 FTEs. If you have 2 employees who work 40 hours over an 8-week period and are paid $20 an hour, okay, they would make $12,000, $12,800. $12,800 is certainly less than the $23,000 that the loan is being forgiven, okay? So there appears, and again, we'll get back to you with more guidance, there appears to be some planning to be doing here with the FTE trap, okay? And then you have the same thing, we came from slide 12, we had the pay rate reduction trap, and my summary here says you can ask for loan forgiveness up to $205,400 unless you modify your headcount and wage reduction by June 30th. Do I know how that calculation is going to work? Not yet. We'll get back to you. During this period, and I'm just seeing the payroll companies come up on this, you've been allowed to defer the Social Security portion, the employer Social Security portion of payroll taxes. And I go through a little example here that gives you all the guidance you need. Lately I've seen payroll companies going to their customers, our clients, with the request, do you want to have your payroll taxes deferred? It's kind of late in coming out because nobody really understood how it interacted with the PPP loan. You have all of the guidance right there. For those who don't have a PPP loan, you know, in my little example there, it turned out to be $25,000 for those people. For those of us who have PPP loans, the deferral is from March 27th to the date the employer receives notification of loan forgiveness from the lender. So that's the date that's, 60 days probably after you file your loan application. So it'll be different for everybody who has a PPP loan as to how long they can defer Social Security taxes for. I see this as a huge cash flow benefit. I am strongly recommending that everybody take advantage of this. As you see, there's quite some deferral periods. You have quite a while to pay this money into Social Security. Other thoughts? employers who are compensated for this family sick leave, I'm sorry, for employees compensated, remember, you get not only the gross wages reimbursed, but also the medical costs for these people. The first 2 or 3 credits that I've seen the payroll services giving, I've certainly seen them do the gross pay correctly. Excuse me. I've never seen them do anything with medical cost. Make sure for these people who are on these programs that you also get the medical cost as a credit from the government. For those who have been unable to receive a PPP loan, know there's also something out there called the employer retention credit. It's probably the next best thing to the PPP loan. Tell customers or clients and friends who haven't gotten the PPP loan to look into the employer retention credit. How you are reimbursed for both of these items is you make fewer deposits, you decrease your deposits on your 941s. We will be back for follow-up trainings. We're looking to be doing one in mid-May. We will also be looking to do one in early June to assist you as best we can to do the calculation as you're going to start doing those calculations. So remember, you'll have your loan for 8 weeks, and sometime after that 8-week period, you'll have 8 weeks to spend everything. Sometime during that, shortly after that 8-week period, you'll have to do your loan forgiveness application. So you'll want to know all of the rules to make sure that all of your payments incur in the 8 weeks and you get maximum forgiveness. And with that, I'm going to invite my colleagues back in. I'm hoping you guys see only about 18 chats, and I know Jeff has asked me some of those chats. I'm going to ask my friends and colleagues to provide me with questions that their clients have been emailing them. Once we go through that, I will then stay on, and Jeff and I will try and answer questions for those of you who want to remain on and remain in chat. And I can tell you the attendance here has stayed pretty consistently around 125, so people are still here. So Doug Theobald, do you have any questions from your clients?
Nope. About trying to get off on. Nope, I don't see any question.
Okay, good. Okay, Patrick Leary.
Yeah, Bob, thank you for the presentation. Very, very informative. A couple questions. One being the $100,000 limit. That $100,000 limit, can you just go through that? If an employee is making more than $100,000, they exclude the full amount? Do they only exclude a portion of the amount and doing the calculation of the loan and on the forgiveness?
The forgiveness is so what I told everybody to do when applying for the loan was look at box 5 of the W-2s that they prepared and issued. Box 5 is Medicare wages. So if that wage number was $125,000, you were supposed to reduce total compensation, the total of all your W-2s, by $25,000. Loan forgiveness application, if somebody has made $20,000 in the 8-week period, rounding, you're only allowed $15,400, so you must reduce payroll by $4,600. So I think I took a long way of saying it is only the amount in excess of $100,000. Everybody's allowed to be compensated up to and including $100,000 with that forgiven. And let me ask one other point, Patrick, and I do appreciate the question very much. It is just compensation. There was some confusion. Did the $100,000 include payroll taxes? Did it include medical insurance? It did not. it was not all inclusive. It was $100,000 just in compensation. On top of that, the employee gets health insurance and gets retirement. Patrick, anything else?
Yeah, one other one. Independent contractors are excluded from the calculation of the loan and of the forgiveness, as I understand it. And so if I am paying an independent contractor and that amount decreases during the forgiveness period, that will not impact my loan forgiveness. Is that correct?
Has no effect. Independent contractors have no effect whatsoever. If you applied for your loan very early on and included independent contractors, highly unlikely you'll be able to have your whole loan forgiven. And, questions, that May 7th date is an interesting date. Might they say, if in fact you made a calculation based upon original guidance, including independent contractors inappropriately, they might ask you to give the money back by May 7th, still up in the air on this point. Did that answer the question, or did I go off on a tangent?
No, that was good. That's all I have. Thank you, Bob.
Okay, Lisa?
Bob, I have a few in the chat room before we get to Lisa.
Oh, no, let's do,
Pull it up here a little bit.
is Lisa not here? Or?
She was, but I think she had some technical difficulties at one point.
Yeah, I thought I saw she left. Okay, so let me just say that, Jeffrey, I think I forgot to say that if people want CPE, they can email us for CPE, correct?
That is correct. They should email the person who invited them, and we can get them the appropriate certificates and whatnot.
Okay.
But
So now, give me 1 second, Jeff. So now, thank you, everyone. Stay healthy, stay safe. Continue to run incredible businesses. Thank you for being clients. Thank you for your attendance. And now I think hopefully until we run out of questions, I'll be here to answer questions in the chat room. Oh, I'm sorry. Wait a minute. I forgot Stacy. Stacy St. Pierre, you were monitoring my email. Do you have questions for me?
The only question that I saw was clarification on what's considered health insurance. Is disability or vision included?
To be determined. I don't have any more guidance on that at the moment. I'm thinking they said health and dental did qualify. I don't have a lot on that. Hopefully they'll give us a good definition at some point. That's it, Stacy?
That's it.
Thank you. All right, Jeffrey, me and you.
all right, so I think a big question that everybody keeps coming back to is during that 8-week period, additional bonuses, commissions, or like temporary type employees that get that sort of income. Does that count? Does that count against you for forgiveness? Does that count? Like one person asked just before this whole started, they offered bonuses for those who, accomplished something or whatnot, and it then got paid during the 8-week period.
Yeah, great question. So far, there hasn't been a lot of guidance on it. I would hold back on bonuses until we need more. Make strategic business decisions. It is certainly part of payroll. Recall that, if your payroll goes up, but your FTEs go down, I don't know, you're going to have that reduction, right? So worry about FTEs when you're given bonuses, and also worry about whether somebody would get in excess of the $15,400 because of bonuses. So while there's no provision against doing it, you get to run your business, you get strategic business decisions. There's two other factors at a minimum that come into play there.
Okay, good. Thank you, Bob. Another kind of follow-up in that same mindset. What about those who just so happens that their yearly increases occur? Everybody gets their upgrade in payroll and wages during that during that 8-week period, is that gonna hurt them?
It shouldn't. No, so it's basically the same answer. It really shouldn't hurt anybody. Again, as long as they're strategic business decisions, I don't see how you can be harmed.
And what about deferred comp?
Does it go on the W-2? If it goes on the W-2, yeah, they did say something about that as people retire. If you give them a retirement incentive or whatever, that's going to count. Same thing, it's still going to be maxed at 15.4. So if deferred comp went over 15.4, let me think about deferred comp for a moment, because I'm wondering how deferred comp was incurred in the 8-week period. The incurred portion of deferred comp may be the issue there. Two issues: incurred and whether you get over the 15.4. Jeffrey, what do we got?
In regards to more payroll type questions, car allowances are included in our payroll. Can we include this in the payroll deduction?
Is it included? If it's included in total compensation, I believe it is.
What happens if you receive the funds and payroll on the same day? Is that payroll included in the 8-week period?
That's a good question, because if that actually happens, you might in fact end up with 9 payments in the 8-week period, right? That wouldn't qualify. That wouldn't qualify, so I didn't think that one through. But only 8 payroll weeks should qualify. It shouldn't be 9.
Let's see here. Just a reminder to everybody out there, we will try to continue to get through some of these questions up until the 10 o'clock hour. But if after that we haven't answered your question, please do reach out to Doug, Patrick, Lisa, or Bob, or any of the tax managers at our firm, and we can definitely help you through some of these. Like I said, we will try and get through some of these, but we will not be able to get through them all by the 10 o'clock hour. As a reminder, the presentation and the video that we're recording will be on our website after the completion of this seminar. So hopefully you can get some good answers and go back and review if needed. Full-time equivalents, Bob, can you kind of just quickly go into that, what the difference, I mean, is it 2 people for 40 hours? Is it 1 person? Or can you kind of just elaborate a little bit?
So let me go through an example. Let's use an 8-week period. You have 1,600 hours in those 8 weeks. 1,600 divided by 40, I believe, gives you 40. That is your FTE. If the person who asked that question wants to turn on their chat, if that's confusing, I can work through that again. But I believe everybody's. So again, I think when you're dealing with FTE, as long as you basically do the same calculation for the base period and the final period, whether you say I work 35 hours a week or 40 hours a week, mathematically, I think it's got to come back to the same place. They want to do, where the payroll reports are going to have to be modified here to help you with FTEs are people who are on salary and things like that. A lot of times they're not in, they don't have their hours up. So the payroll reports are probably going to have to be modified for that. But for the most part, the payroll companies have really done a nice job here putting together the accurate information for you as to what you can put on the loan forgiveness, both the loan application and the loan forgiveness schedule.
Here's a different one. Payroll goes up and FTEs go up. Any penalties or downfall or anything like that?
Shouldn't be. Well, so here's the question on that one, okay? where you might get burned and what we're looking for guidance on. If your payroll and your FTEs went up, did you need the loan? Right? That would suggest to me that your business is doing better. Your business was one who increased during the 8-week period. Were you in need of the loan? At application time, sure. Nobody knew what was going to happen or whatever. But in terms of the guidance I have today, there is nothing that, that should be a problem in having forgiveness.
Leases, do they include auto leases?
That to me is personal property, so I would think it would.
Here's a fun one. If I have an employee who would prefer to stay on unemployment, how do I work around that?
Yeah, really good question. I don't have an answer. Maybe hire somebody else. I don't know. Yeah, I don't have the answer. Take advantage of the June 30th of the extension period. Take advantage of that. Other than that, I don't have a lot there. It's a difficult problem. One way to boost FTEs, as I've been thinking about, is bring on some lower level wage people for a little while too. Remember I said we'd talk about FTE planning at some point.
Yeah. Any idea on how it will reflect upon Schedule C businesses that have not yet filed for 2019?
Get a draft Schedule C from your accountant as quickly as possible. Ann's got a good question. I just saw a question from Elizabeth O'Connor. Elizabeth, I don't understand how in an 8-week period you have 5 payrolls. She says she pays bi-weekly. Unless, somebody gave an example before, did we get the loan on the date of payroll? I guess that could work. But I'm thinking in your calculation, and maybe you can turn on your chat if you want, but I can't see how you have 5 payrolls in an 8-week period. Yes, you have them in a 2-month period, but not in an 8-week period. Eddie Wittrick is up there. You have a couple questions. Do temps qualify? W-2 counts, Ed. W-2 counts. That's all we're looking at. I don't know, how did you pay your temps? If they're independent contractors, then the answer is no. If they're on your payroll, they count both as FTEs and as compensation. But if they're given a 1099, if they're not on the W-2, they don't qualify. Ann McEwen asked a great question. I didn't go through this. Should we use a separate bank account? I see absolutely no reason, 0 reason to use a separate bank account. I think the same documentation that you're going to use is the same forgiveness documentation is going to be there relative to whether you use a separate bank account or not. So I don't see the benefit to it, quite frankly.
Surgical ones?
Yeah, they don't cost anything, they're free.
Greg Patrica, your mic is open. Greg Patrica, please shut your mic off. Greg, I'm glad you joined us.
We have a question. Funds will be considered taxable by the IRS.
Our cars got them.
I got the regular surgical mask there.
Jeffrey, if you can find Greg Patrica, remove him, please.
Yeah, probably.
I'm
Like
going
that,
to try here.
the other 2 also.
Hey, Greg, you gotta shut off.
Except Walburn off.
All right. All right,
Thank you
Bob.
very much. Great question. Great question. It is unclear. So let me go through the taxable, untaxable thing for a moment, okay? The actual debt forgiveness, it is pretty clear, is not.
I would think
Greg.
so.
I don't know, maybe I can find them too here. I wouldn't know how to kick them out though.
Okay.
So let me go back through sorry, I lost my train of thought. Whether this is taxable. Clearly it is in the law that the amount of the loan forgiveness is not taxable. Clearly, okay? The question that is open for debate and discussion that I believe the IRS has, that SBA has thrown to IRS is, are the expenses still deductible? If you have non-taxable income, your expenses against that are non-deductible expenses in most cases. So that's what I think is going to happen. I think it's going to be a push. You know, if you have a $500,000 loan, I don't see why you get $500,000 of non-taxable income and $500,000 of expenses and a $500,000 loss on your tax return. That is a huge double dip. It's probably a triple dip. And I don't see how that's going to end up leaving that or ending that way. Great question. Tiffany says, what happens to employees after April 26th? They are FTEs and furloughed on May 1st. Yeah, I think what you're going to do, Tiffany, I'm trying to read into your question here. And if I do it incorrectly, please turn on your mic. It is all FTEs during the 8-week period. You don't look onto any 1 week or anything like that. I believe you're going to add up all 8 weeks of payroll and then somehow make another adjustment for payroll after June 30th. And then maybe do your FTE calculation that way. But I hope that answers your question. Philly Jaguar, what about somebody who has a Schedule C business in 2020? There is guidance out in there. I didn't have time to read it. Okay, so Mark and Andrea have both come up with a question here. In the presentation, did I see that Bob makes a total of gross wages and health insurance payment and then multiplied this number? Well, I divided the number by 0.75%. Why was the total multiplied by 0.75%? The 0.75%, the only reason we did that calculation was to find out what maximum allowable costs are. In my calculation, I'm going to try and bring it back on the screen here. Right? I specifically moved this calculation into this column here. Okay? The only reason to do this calculation here was to find out maximum other costs. Certainly in this column, when we're calculating total forgiveness here, the 180 still stood. Okay? Jeffrey, did we go off at 10 o'clock? I didn't see anything. I think it's a couple minutes after 10 now.
We are still on. I'd like to wrap this up here relatively soon and just reiterate that if you have questions, please do reach out.
Mark and Andrea, if that, thank you, Bob. Mark got it. Andrea, thanks so much. Super. Thank you, Andrea. Very nice of you to say so. Again, we will return. I will return. When I agreed to do this, I said, we're not doing this one time. We're doing it at least twice. Thank you, Ann Golden. Thank you so much. And Connie, you're very welcome. And, you know, I want to help all our clients as much as possible. And that's why we're going to be out. David, thank you so much. Mark, you're very welcome. It was nice to be able to help so many wonderful clients. Annie J, you're welcome. And again, we'll be sending the invites out. Oh, thank you, Kimberly. Thank you for that.
Thank you, everybody, for attending. Please check out our website after this for the video and the presentation. We'll see you here again shortly. Thank you, everybody.
You're welcome, man. Thank you.